I want to start today with sort of two economic stories that are kind of coming together as one. One I find more interesting, one I find less interesting. The first piece is this issue of inflation and inflation fears, and we again have data which we'll look at that prices went up again in the month of September. The second part of this, I really am kind of struggling to take it totally seriously, although there is an interesting piece to it, which is fears of toy shortages for the Christmas season. Now, the reason I have trouble sort of taking it totally seriously is given everything that's going on, everything we've had going on with the pandemic, all sorts of different calamities and crises and different things. If there's not every toy available at Christmas, it doesn't strike me as the absolute worst thing in the world. But it's interesting insofar as it relates to the continued supply shortages for a number of different reasons that we've been seeing. So let's start with the inflation piece. Reuters reporting U.S. consumer prices increased solidly in September, poised to rise further in the months ahead amid a surge in the costs of energy products, which would cast doubt on the Federal Reserve's view that high inflation is transitory. This has been the debate. Are we seeing sort of some catch-up inflation relative to the declines due to the 2020 pandemic? Due to the pandemic in 2020, the pandemic's still going on, but due to the effects of the pandemic in 2020, or are we seeing the start of some real inflation? The Consumer Price Index rose 0.4% last month after climbing 0.3% in August, the Labor Department said Wednesday. In the 12 months through September, the CPI increased 5.4% after advancing 5.3% year on year in August. Excluding the volatile food and energy components, the CPI climbed 0.2% after edging up 0.1%. So if you don't include food and energy, the increase has been very modest. However, food and energy are significant expenses for many households, particularly, one of the things about food and energy, and we've talked about this before, but I think it bears repeating. There is a sort of regressive aspect to food and energy spending. And what I mean by that is, if you're really, really rich, you're not necessarily going to be driving that much more. You might have a car that's less energy efficient or one that's more energy efficient. Okay, if you're doing private jet travel, then yes, if you're very rich, you actually are going to spend a lot more on fuel. But in terms of like driving a car or heating your home, yes, if you have a significantly bigger home, you'll pay a lot more to heat it. But relative to your income, relative to your net worth, it's not going to be that much more. So in that sense, energy cost increases, fuel and home heating, electricity for cooling as well, they hit the poor more than they do the rich. Similarly with food. Okay, if you're wealthy, you might buy everything organic at the most expensive grocery store, but just because you make 50 times more than someone else, you're not likely to spend 50 times more on food. So this idea of if we exclude these two categories, energy and food, the increase isn't that much. Well, those are categories that disproportionately affect the middle class, lower middle class, and the poor. Oil prices jumped Monday to the highest level in years. Expensive energy products would add to accelerating wage growth in exerting upward pressure on inflation. The government reported last week that average hourly earnings increased by the most in 7 months on a year-on-year basis because of worker shortages. With the number of people voluntarily quitting jobs at a record high in August, at least 10.4 million unfilled positions, wage inflation is set to rise further. So this is one piece of the story. The other piece, which again, I'm sort of like, okay, I mean, I get it, but it's also, it is what it is. Toy makers warn delays in stocking retail shelves could create a 4-month holiday hangover. Power outages in China, a resin shortage, and high labor costs have also strained the supply of goods and increased prices. The blockage of the Suez Canal in March is part of the bottleneck. Some questions about shares, which we don't care that much about. But there may be delays in getting people toys. So what's the big picture here? We may be heading towards real inflation, meaning not just rebound relative as an artifact relative to the pandemic, We said this 6 months ago. We need to continue watching it. Now, there's another piece that's important to understand, which is inflation good or bad? This is sort of like a fundamental question. If you accept, and many of us don't, but if we accept traditional economic thinking based on, at least for now, indefinite growth, you want a little bit of inflation. Why? Some people think, no, you don't want prices going up. You want prices going down. That's good for people. It's good for consumers, or prices stay the same. People buy stuff because you expect that prices will be a little bit higher in the future. Maybe not consciously, but let me put it a different way. If you're looking for a car, if you're looking for a home, if you're looking for toys, if you expect prices to go down, that would discourage you from buying right now, because if you wait, you can pay less. If everybody did that because they expected prices to be lower in the future, nobody would buy stuff. And this would actually create a deflationary spiral, which could depress wages. It can put small businesses out of business, et cetera. If you have tons of inflation, people just can't afford stuff. Wages don't keep up. People can't afford stuff. So this is where the mentality of you want a little bit of inflation. That's where wage growth comes from, to the extent that we have wage growth. That's where business profit comes from, et cetera. So when we talk about inflation, it's important to understand that traditional economics doesn't say any inflation is bad. In fact, we have a sort of global economy and status quo based on a little bit of inflation. You expect things to be a little more expensive in the future, so you're going to go out and buy them today. And this creates revenues for businesses with which they pay employees, the money with which those employees go and buy things, and sort of keep this train going. Now, if you don't believe in unlimited growth, then at some point the paradigm has to shift. But in terms of the immediate impact, we are seeing sectors experience inflation that disproportionately affect the middle class, lower middle class, and the poor. And we'll just have to continue tracking those data. One of our sponsors is Atlas VPN. In the year 2021, many computer security experts say everybody should be using a VPN whenever you connect to the internet. Atlas VPN keeps your information private from big tech companies, from your internet service provider, even from governments. Atlas VPN helps you stay protected from hackers trying to steal your data. And Atlas VPN even lets you watch shows and movies on Netflix and other streaming services you would otherwise only be able to access from other countries. I use Atlas VPN on all of my devices, phone, computer, tablet, whenever I'm connected to the internet. It's so easy to use. You sign up, install it, turn it on, and you're done. Out of sight, out of mind. You stay protected. And right now, my audience can get Atlas VPN for $1.39 a month with a 30-day money-back guarantee. You just have to go to atlasv.pn/Pacman. The link is right underneath this video.